JP Hussey here, owner of the Hussey Team Mortgage Advisors. Let's talk about not escrowing your taxes and insurance. All right. Now, what that means is when you buy a home or refinance, right, a lot of times they will take what your property taxes are and your homeowner's insurance, all right, and put that into your payment. Basically, they add that up, divide by 12, and they put that in your payment. And that mortgage servicer, right, the one you're paying every month, will pay your taxes and insurance when due, all right? We have found over the years, it used to be common practice to do this, but we have found that there's been a lot of issues with mortgage servicers in paying the correct taxes on time. And sometimes when you pay them early, you get a discount. And also with paying the homeowner's insurance, right? So we have found that not escrowing your tax insurance could be a better play, right? But there's a little plan that we want you to do to protect yourself, and there's actually a benefit here, right? It's a little bit extra work, but trust me, if there's an issue with your servicer and they're screwing up, it's going to be more work. So here is the plan that we put together to help you make sure you pay your tax and insurance on time each year, and maybe even counteract the increases that are probably going to occur with your homeowner's insurance and your property taxes, all right? So in this situation, your payment that you pay every month to your mortgage servicer will only be the actual loan, the principal and interest portion of your loan. Now, this is going to look less as your total budget, right? Your monthly payment budget. But again, let's go through the plan and show you how this is probably a better idea, all right? So step one, you want to open up a Capital One savings account or a money market savings account, something. Do some research. We only say Capital One because that's what I've used personally, and they give you some good return on your own money, which we'll get to in a second. But you want to open up some sort of account like that where you can access your money easily. So if you put it in some other account where it's tied to stocks and bonds and all this stuff, it could be harder to pull out your money. So you want to make sure it's a typical type savings account or a money market account where you're earning interest on your own money. All right, that's step one. All right, and you might have to put a couple dollars in there to open up the account. All right, step two, you want to add up your annual property taxes on your property and your homeowner's insurance. All right, so let's say the property taxes on your house are $6,000. All right, and let's say the homeowner's insurance is $1,000 for the year. That would be $7,000. 7,000, and this is really step three, 7,000 divided by 12 is $583.33. So every month, right, and you'd be paying this anyway if you escrowed your taxes and insurance, remember, you want to take this amount, all right, whatever that number is, and put it into that savings account, all right, every month. Do it automatically is the key here. You don't want to forget, but if you can just do it every month, boom, 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 start stacking money, all right? Then, when your taxes and insurance are due each year, you have to pay that usually in a lump sum. Sometimes property insurance, homeowners, they're going to give you payment plans as well. You can do that, but I recommend you're saving up anyway, just pay it when it's due each year. And here's the cool thing. You're earning interest on your own money during the time you're putting it in. So what this could do, and put more in if you want. I would love it. Just keep banking money, right? But at least that amount that we showed, right? You're earning interest on your own money. And with property taxes and homeowners insurance only going to go up every year probably, it's very rare that it goes down, you're counteracting some of this increase with your interest on your own money. So it may sound like a little bit of work, but this also could put some good habits in place for saving other money as well, right? So if you save other money other places, that's great. But have a separate account for this and start banking some money. I hope this helped. If you need anything else, please let us know.